October 8th, 2025. Welcome to the league. You're joined here today with David Magid, and my co-host, Benoy Thanjan, aka the Solar Maverick. Today, we're going to first discuss some exciting news. TotalEnergies has just sold down 50% of a stake in a 1.4 gigawatt operating portfolio to KKR. This brought an enterprise value $1.25 billion. We're looking at 870,000 per megawatt. Absolutely huge. Hurdle returns around 12%. Amazing investment. KKR has committed over 23 billion of these energy transition investments to date. And this $950 million inflow of cash flows is supporting Total's business. Second piece of insights that we're going to discuss today is hydrogen hubs. Very unfortunate, $24 billion worth of contracts terminated, 321 grants, absolutely a mess. These projects have been going on for some time, a lot of hype around hydrogen. Very sad to see to all the folks there dealing with all the headwinds. This was announced just recently. Unfortunately, we're expecting to hear a lot more news like this. It's affecting many, many states and many projects. Very sad to see. And that's that.
Thanks, Dave. That's really great news. I've been following those two topics as well. I appreciate you covering it because obviously it's really impacting the industry. I'm kind of talking about something similar too. The International Energy Agency, or IEA, on Tuesday cut its global forecast for renewable power growth by 2030 by 248 gigawatts from last year's outlook, citing weaker prospects in the United States and China. But they say solar power continues to drive record additions. Global renewable power capacity is now expected to rise by 4,600 gigawatts by 2030, down from their initial 6 year forecast of 5,500 gigawatts in 2024, with solar accounting for about 80% of the increase. What they were saying is that they expect to see a drop of their projections for the US alone by almost 50% because of the early phase out of US federal tax incentives and other regulatory changes. Also, China is actually shifting from a fixed tariff program to competitive auctions, which will hurt the project economics. So going forward, there'll be less government incentives for renewables, and that's what's uh, leading to the decline in renewable energy growth. And that's primarily happening in the US and China. They're actually saying that there's stronger outlooks in other countries, which I thought was interesting. India is set to become the second largest growth market after China. And they're also talking about how Europe, Middle East, and Africa are also accelerating their build outs as costs continue to fall for solar specifically. And solar is a technology, not a fuel, that continues to go down in price and is the cheapest form of electricity to come online. The other major news too was repowering of solar assets is something that's getting more and more popular. I know I've seen a lot more repowering projects in different states in the US. If you're not familiar with what repowering is, they're saying that about 33% of this was an article in PV Magazine of US solar is approaching midlife. And if you replace the inverters or upgrade the modules, it could cost 40 to 70% less than greenfield development. I'm seeing, especially with the lower incentives related to on the federal side, that a lot of investors and developers are looking into these sorts of repowering of assets. Inverter lifespans are a key bottleneck that many solar plants will need to refresh. Usually, the inverter life is 15 years. Also, module technologies are now at 26% efficiency, which offers like a significant increase over older panels. This repowering is definitely, you're going to see more and more and hear more and more about it. I definitely wanted to speak about this on the lead because this is definitely something that's going to be one of the biggest areas of solar going forward. Thank you for time. You've enjoyed 5 minutes of the best information in the clean energy sector. Promote, like, give us 5 stars, and become a subscriber. Thank you for listening.